Fundsupermart.com.
With a new government in power, what is the outlook for Malaysia equity market for the remaining of 2018? What kind of returns can an investor expect?
We have seen some volatility in the market with a lot of policy uncertainties under the new government. But things are actually getting clearer with ministers coming out to explain certain policies and all that. But there are still certain things that we are waiting. We are waiting for August, the 100 days report card, and also more clearance in some of the policies. Some of the things are still pending, like for example some projects, what are they going to do with the projects and all that. And we are also waiting for the coming 2019 budget that will give us some clearer picture of how the economy is moving forward and what kind of policy they will impact or help the corporates. Okay. We are hopeful that maybe with all this clearer picture, sentiment will be better in the second half, and we are expecting something like maybe single digit of return in the second half.
Has there been any particular sectors which have outperformed or underperformed for the first half of 2018? And what's the reason?
In the first half of 2018, we find that if I break down to different sectors of the Malaysian market, only the consumer sector has actually outshined the rest. So consumer sector alone has achieved about close to 13% return. Banking pretty flat, and the rest of the sector seems to have suffered some correction. Reasons being that consumption is actually quite strong, and expectation on consumption to be continue to be strong under the new government, cost of living being controlled and all that is actually very positive for the consumer sector.
In your view, which sectors are likely to emerge as the top performing sectors for the remaining of 2018?
For the remaining of this year, we expect that in the short term, maybe those sectors or those stocks that were being sold out very badly to have a rebound, perhaps a technical rebound, and we are also quite hopeful that the clearer picture on the trade war may actually help some of our export sector and technology sector.
What is your view on the local small cap segment? Do you think small cap segment is a better investment opportunity at this time as compared to the big cap segment? Why?
Small cap has done very well in the last few years versus a large cap. And for last year, we find that the valuation of small cap is catching up with the large cap. But this year, year to date, small cap has corrected almost 13%, and the large cap just corrected about marginal 1–2%. So small cap looks quite attractive at the current level, but of course, comparable to the large cap, I think maybe selective small cap stocks are quite attractive, but it's selective and not across all the small cap.
What is the most significant local economic or market risk that is on top of your radar?
We see two major risks that we are monitoring very closely. First, at the global picture is the trade war between US and China. We want to see the election in US, whether people are more supportive of Trump's policy of this trade war, and how is the China reaction to it, because this could have a spillover effect on really how the extension of the trade war and the impact on the other countries. Malaysia is actually very export-oriented and rely a lot on export, so this is something that we monitor very closely. On the local front, policy is very important. Okay? Under the new government, there's a lot of policy uncertainties. We want a clearer picture on some of this policy and how is all this policy impacting the corporate and corporate growth, corporate earnings, margins and all that. So a clearer picture is actually very important.